Hello everyone. I hope you are all good and healthy and your exams are going good. Actually. So today I'm not going to solve questions as I told you. I'm just going to go and just say this is the question that you concentrate more. You're expected to solve it yourself and come up with the questions, certain questions. If you have any questions, you can ask, but before asking, I would like to share my screen to show you something very important from this book itself. I don't know, maybe you have studied or you have tried to cover or not. So this is the chapter first that you're responsible is government policies on demand and supply. So you are expected to read everything. And if you remember, the case is about the price selling and the price floor is about the binding and not binding. Okay, this is the important issue. You should be able to understand them well. So when it's binding, when it's not binding, and so on. So when it's a price selling, if the price set by the government be above the equilibrium, then this is the case of not binding. That means the government set price will not affect the equilibrium. If the price selling is put below the equilibrium, which means the equilibrium will be affected. It's a binding case. So this is, you should be able to differentiate and identify easily. About the price selling. Same thing with the price floor. Same thing with the price floor. Okay. So if this is the case of the price floor, it is just opposite of the price selling. When the price selling was, if you put the price, if the government sets the price above the equilibrium in the price selling, it's not a binding case, but in here is the price selling should be below the equilibrium in order to be not binding case, which means that the equilibrium price and equilibrium quantity should not be affected by the regulation of the government if the price set below the equilibrium. But if the price has been set above the equilibrium in the price floor issue, we know the price floor is the minimum price that should be paid is the minimum, and basically the price floor is used in the case of the wages, okay, the minimum wages. So if it's set above the equilibrium, it is the binding case. So that means the equilibrium price and equilibrium quantity will be affected. Okay, and you have to know what is surplus and shortages. Take it into consideration. Okay. And there is issue related to the taxes. It is important as well. And concerning the taxes, there are some cases when the taxes is waived on the buyers or sellers separately, and there are some cases when it's shared by both. So the tax burden is shared by both. So in here it says that the tax on the seller shift to the supply curve upward by the size of the tax, or which is 50. Okay. If this means that the tax on the sellers, if the government puts the tax on the seller side, it will reduce the supply, so it will make the supply curve to the left side. So it will move here. So the price was 2.80 for certain. So the $3. The price was $3. However, it shifts here. So I already explained this to you, but I want you to pay attention to this as well. Okay, how to differentiate the tax issue on the seller, tax issue on the buyer. Okay. So in here, if the tax issued and waived on the seller, the supply is affected. If the tax is waived on the buyer, the demand affected only. So in here, the supply shift to the left, it affects the demand side as well, because partially the tax will be paid by the buyer and partially will be paid by the seller. So read it again if you didn't understand, and please try to understand the logic behind this, like when the tax is waived on the seller and when the tax is waived on the buyer. Here's the example when the tax is waived on, when the tax is put on actually buyer side, that reduces the demand, or it might increase if it is the subsidy, the opposite of the tax. So how the tax is being shared and who's getting the benefit and so on. And but the equilibrium without tax was this one, and now the equilibrium becomes this. with the tax. The price is reduced, the quantity reduced, and how much the government could get and how much government could earn, you should be able to identify, you should be able to calculate it. So in here, as you can see, the difference between the price that the suppliers is ready to sell this certain amount of the goods is $3.30, and actually the buyers are ready to pay, are willing to pay for this quantity of the goods. The price is this one, and the difference between the supply and the demand is the tax amount. So all the calculations are given. I already did calculate it. Please try to understand it better by reading the book. Do not escape it. These are very important issues.
Mr. Alimshan,
Yes, please.
Could you please explain me how you counted this 3.30 and 2.80? Is it given in the task, or do we have
yeah,
to
these
count
are
it?
given. These are given. It will tell you directly in the questions, okay? For example, if might be case, it says that the tax is applied $50 on this. As you can see, how much of the demand and how much of the supply is affected. Who can tell me what is the amount of the supply they share the tax burden on the supply side, and how much money is shifted to the buyer side of the supply? So the difference between the equilibrium without tax minus this 2.8 will be on the buyer side, because we are concerning about the demand, and 3.30 minus the equilibrium without tax will give it on the seller side. The same thing was on above. Or how much the government will receive? Who can tell me?
$0.5.
No, as a total from total collects the government tax. How much government will collect? For 1 unit, you're true. They will collect 0.50. But for all units?
$45.
Yes, very good. Very good. So these are the things that you should pay attention. And one thing that I want to tell you, please feel free, read it again, and try to calculate. And regarding the binding and not binding issue as well, please try to do it as well. Read them, and please feel free to contact me via WhatsApp or email. I prefer email. Contact me via email if you have any questions before tomorrow. I will be very happy to answer, to help you. Okay. And these are the questions that you have to solve it. The solution available in the Moodle. You can go over it. It's there are questions that are strictly related to the chapter book. I mean, they're kind of, if you have any questions, if you try to solve it and you couldn't get something understand, please feel free to ask me. If still you didn't have a chance to go over, try to solve it. If you have any questions, answer, but the solutions are available on Moodle. I believe the solution will be more than enough to answer your questions if you have them. Okay, this is chapter 6, and coming to the cost of production. In cost of production, you have to know the relationship between the profit and total revenue and total cost and how they're derived and so on. You have to know them, like profit is equal to total revenue minus total cost, and total revenue is the amount of the firm they receive for the sale of its output. Okay, price times quantity, and the total cost is variable cost plus fixed cost. And total cost, it consists of explicit cost and implicit cost. This is what you should know. Another thing about the profit that has been divided into two parts, like economic and the accounting profit. You should be able to differentiate. Okay, here we go. Some of them are not including the implicit cost, some of them is including. So implicit cost is all about the opportunity cost, okay? The cost of capital and opportunity cost. So the money that you have invested in the company, it could be invested in somewhere else that you could have earned some profit, like earning some interest on that. So this is the opportunity cost, which you should include it in estimation of the economic profit. Okay. And how the marginal product is being estimated here, I already explained. It's explaining here again. And like for one unit, for one additional worker increase, by how much your output increases, it shows the marginal product, and it is a diminishing. So that shows that it's a decreasing order. So that increasing the number of the workers does not really increase the productivity, but it increases the quantity. However, it will increase up to some level. But the difference, additional increase in the quantity will not be that much bigger as you go further with that more number of the workers are increased. So as the production grows, eventually it becomes horizontal line, which means that increasing the number of workers, it will not create more production. So the production will be kind of constant eventually. However, while increasing the number of the workers, at the same time increases the total cost, and total cost becomes like vertical line, and it goes up, up, up as you increase the number of the workers. Output doesn't increase, it stays the same, and the total cost will increase. Even though the fixed costs in the long run have a decreasing pattern, but fixed variable cost is which is the number of the workers as you increase it, that will make you to go more and more incur the cost. So the various measure of the costs, like total cost, fixed cost, variable cost, average fixed cost, average variable cost, and so on. How they're estimated, all they're here. They're straightforward. And we have marginal cost. There is a difference between the total cost, increasing the number of the output by one, by how much your total cost will increase, okay? By how much your total cost will increase. So this is the relationship you should know as well. This is important. When the cost is minimized, at what point, if anyone remembers, tell me now, when the cost is minimized, total cost. When the marginal cost intersects with the average total cost, it's at minimum point, okay? So that means you should stop here. You should not go beyond. So if you go produce more output, that will bring you more cost. But if you are somewhere here, that means you should increase output in order to proceed to get the benefit of economic of scale. If you're somewhere here, if you increase the output, that will give you the actual drawbacks of the diseconomy of scales. So this is another version. Yeah, one thing that I wanted you to pay attention as well, it's related to opportunity cost, okay, which is important. I think I skipped it somewhere here. Read it carefully, play around with the numbers, okay, this is very important, how everything is calculated. Opportunity cost is very important as well in estimation of the economic profit, okay. And coming to the last, here's a summary of the cost and calculation of the end of the chapter questions. But I would suggest you to skip question 8, okay? Skip question 8, but there are solve others, okay? Just go with other questions. Skip question 8. And one more time, I want to return again about the chapter 6. Please make sure you understand the difference between binding and not binding the case in terms of price selling and in terms of price flow. And for me, it's very important, the tax issue. When the tax is left on the seller, what happens to the supply? And when the tax is left on the demand side. This is very important as well, okay? For example, yes, please. Yes. And one more thing, guys, to you, please even share with your friends. I used to have like 1 or 2 exams from the test bank directly copying and pasting and putting in the Moodle. Then I realized somebody had the access to it. It's very easy to find it in the internet actually. So all the question I design now, it's done on my own self. So you will not be able to find the questions. It might seem they are very close, they are similar, but they are not the same. The numbers are different. Be careful about it. Do not copy and paste from the internet the answer directly wherever you find it. Just solve it yourself. This is what I want from you. So in here, it explains everything, how the tax on seller affect the market outcomes, step by step, like through the 5 steps, even through the 3 steps, they explains everything, and there's some implication done. So you can easily estimate, and everything is calculated. This thing you should have done it before, but I'm just giving you, and please pay attention to this binding and not binding as well. This is very important. You have any questions? Okay, if you don't have any questions, again, please feel free to get in touch with me, via email or WhatsApp. I would be pleased to help you if there's anything that I can do.